Hi, this is Adrian Larson, co-founder of Pathlight Investors, coming to you with our Pathlight Insight. And since it's the first Friday of the month, it must be Jobs Report Friday. So we're talking about the June employment report. Unfortunately, not a good report, another bad report, unfortunately, in a series of the last three. June employment rose by 80,000 net new jobs. That compares to consensus of about 100,000, so below expectations. The month of May was actually revised up to 77,000 from 69,000 jobs, but the month of April was revised down to 68,000 from 77,000. So a wash there on that front. The unemployment rate still held at 8.2%. Again, we try and not focus on the unemployment rate because it depends on people coming back into the labor force. So we try and just look at the actual net jobs created. So if we look at kind of where we are now, the first quarter of the year, we were creating on average 225,000 jobs a month. That has dropped to just 75,000 jobs per month in the second quarter here in June. A couple of positives, some silver lining coming out of this report. Average hourly wages and the average work week both increased. That means more money in the pockets of those people that actually have jobs. And actually, if we look at the total creation of jobs in the first 6 months of the year this year, we've created over 900,000 net jobs in the first 6 months, and that compares to about 785,000 in the first 6 months of last year. But the private sector has slowed markedly, and we're seeing this. This is an important month coming up. July has been the month that we have seen reacceleration the last 2 years. So we need to watch for that report. Unfortunately, with the current economic climate throughout the world, with struggles in Europe, Chinese economy that's cooling off, it's going to be harder to get that job number kicked back into higher gear like we have had over the last couple years. So we'll keep an eye on it. But again, not a great report. Thanks a lot.